They shouted a date into the wind. They shouted January 1, 2026, and people believed. Now, that date is real.
Tax in Nigeria.
Next year, we are going back to trade by barter.
The UN has been sending Western tax collectors to Africa to force the continent to pay their foreign debts.
Tinubu is the worst president of Nigeria.
But hold up, what you have been told is messy. Half the headlines scares you. Social posts confuse you. So, what's true? What's false? And crucially, what won't be taxed? Here is one fact you must keep. This tax is charged based on your taxable income, the amount left after your allowable deductions and rebates, not the raw gross number everyone is shouting about. Stay with us. We will cut through the noise, show you what's exempt, how the tax is calculated, who wins, who loses, and how to plan.
Every week there's a new information. It's either that this week is the business owners are going to be paying more.
It's one of the areas where we've seen that people do not understand what the new law is saying.
If you have been online in the past few weeks, you would have probably heard the same chorus that every money will be taxed, every crypto will be taxed, any gift you received will be taxed, and any money that enters your account, the government takes its cut. The 2026 reform isn't about taxing everything that moves. It's about clarifying what counts as taxable income and what doesn't. Here are the list of what will not be taxed.
Someone sends me maybe ₦1 million in my account and they say gift. Are they going to tax that as well?
Not every credit alert is income. Sometimes it's love, gratitude, or appreciation. Under Nigeria's 2026 tax reform, money gifted into your account, birthday gifts, family support, goodwill transfers are not taxable. If you send money to your parents, receive something from a friend, or even get a little extra from a loved one abroad, the government or the law does not see that as income. Why? Because tax applies to only earned money, money you worked for, money you made through business, investment, or trades. Gift isn't earned, it's gift.
If you now pay somebody for a service and you call it a gift, it will not make it exempt. Because I saw on social media, somebody said, from now on, when you pay my fees, put gifts in the description. I said Nigerians, eh?
So, next time you receive a birthday transfer or a token from home, don't panic. It's not the government's business. Every credit alert doesn't mean income. Every deposit isn't profit. And under Nigeria's new tax reform, your bank inflow is not automatically taxed. For instance, you received 1 million naira for your project. You spent 900,000 naira for materials, labor, and logistics. Your real profit, 100,000 naira. Now, that 100,000 naira becomes your taxable income. And if by the end of the year, your total taxable income is still not up to 800,000 naira, you pay no tax. But here is where many people get it wrong. When project funds or large transfers come into your account, you can't just ignore. You need to self-declare. When you file your tax, you must explain to the tax authority that this 1 million naira was project money and my profit from it is 100,000 naira. If you fail to declare, the system will never assume innocence. In 3 to 5 years, the taxman can reopen your file and estimate your tax for you based on the inflows you never explained. So document everything, declare it yourself, because silence today could cost you tomorrow. And in chapter 2, we will dive even more deeper to show you exactly how to calculate your taxable income so you can file confidently and never get caught unprepared. Why some industries are tightening their belts under the new tax reform. There is one industry that's breathing easy. If you run an agricultural company, here's some good news. You are completely exempt from tax and free from company income tax for 5 whole years and no remittance fund. This relief is intentional. The goal is to grow Nigeria's agricultural base, boost food production, and reduce dependence on imports. While other sectors are adjusting to the new rates and supply, agriculture is being given a breathing space, a window to reinvest, expand, and strengthen the nation's food supply. Remember, VAT and income tax are two different things. Both are exempt for qualifying agricultural companies. And that 5 years grace, it starts the moment your business is registered and certified as agricultural. So if you ever thought of going into farming, this might just be the best time to plant that idea. You see, some people have already paid their dues. They gave their years, their youth, their energy in service to the nation. That's why the new tax reform keeps them in mind. Pensioners and military personnel stand in a different category, a category of respect. Let's start with the pensioners. While they were still in active service, their salaries have been taxed month after month, year after year. So now that they have retired, the government does not see any reason to tax them again. Their pensions are completely exempt from tax. They have paid their share already. Now it's time to rest. And then there are the military personnel, men and women whose duty isn't 9 to 5, but 24/7, whose duty sometimes means standing in between peace and chaos. The government recognizes that sacrifice. That's why their salaries are exempt from taxation. Even after their retirement, their pensions remain tax-free. It's not just a relief, it's a gesture of gratitude, a silent thank you, a service that money can fully repay. Because when you serve your country with your life, you have already paid a price greater than any tax. Now, let's talk about the people driving the Nigerian's new economy. The content creators, the small business owners, and yes, even the crypto guys. They all fall under one powerful category in this new tax reform, the self-declarer. See, the government cannot just wake up one morning and start taxing every alert that hits your account. That rumor is totally false. Whether you're a YouTuber, a makeup artist, a tech bro running ads, or even a small business owner, you are not automatically taxed. Here's how it really works. You are only taxed based on your profit, not the total income. That means, before the taxman even calculates anything, you get to subtract your expenses. Let's break it down. If you're a content creator, your expenses could be your camera, your microphone, your editing software, internet bills, and even what you pay your editors or staff. If you are a small business owner, your expenses might include rent, power, new equipment, fuel, delivery vehicles, or even the cost of building a small office. All those costs, you can minus them before you declare your income for tax. The remaining profit is what the government looks at. Even that, you will only be taxed if your profit crosses 800,000 naira each. But here is the catch. You must self-declare your earnings. You have to tell the tax authorities how much you made, how much you spent, and how much your actual profit is. If you fail to declare, the taxman can calculate it for you after a few years. And trust me, you might not like his math. Now, what about the Nigerians living abroad? The ones who still send money home to build houses, support family, or even to keep their Nigerian accounts active. There have been a lot of confusion here too. Many people believe that the moment your pounds or dollar touches a Nigerian account, the government automatically takes a slice. If you are a non-resident Nigerian, meaning that you live and work outside the country, your foreign income is not taxable here in Nigeria. Why? Because it's assumed that you're already paying tax in the country where you live. If that country have tax treaty with Nigeria, you are fully protected under that agreement. Countries like the United Kingdom, Canada, France, Spain, Italy, China, and several others already have tax treaties with Nigeria. That means your income earned in those countries cannot be taxed here again in Nigeria. However, there is one important rule, and this one changes everything. If you return to Nigeria and stay 183 days or even more in a single year, the government counts you as a tax resident, which means you are going to pay tax. Once you cross that threshold, you'll be taxed like any other Nigerian resident based on the income you earn during that time. But as long as you live and work abroad and you're already paying your tax there, your transfers and savings sent home remains exempt. So to every Nigerian working hard overseas, your contribution to your family is not being taxed twice. Hey my friend, don't click out yet. Just hold on a second. I really want to appreciate you for watching this video to the end. This is actually my first video on YouTube. My first real try at creating something like this. And your support means a lot to me. If you enjoy it, please give it a thumbs up. It helps this video reach more people who might need to understand what's really going on with Nigeria's new tax reform. And if you think someone else should see this, share it. Let's get more people informed. But if there is something you didn't like, it's okay. Go ahead and give it a thumbs down. But please tell me why in the comment section so I can do better next time. And of course, don't forget to subscribe and turn on the notification bell because there are more videos coming. Videos that dig deep into the stories, the changes, and the realities shaping Africa today. Thank you so much for being here, my friends. I will see you in the next one. Hands to head. Peace.